Hey there, Klaus. It's Phil McDowell, the Mortgage Professor, brought to you by Mortgage Alliance. Mortgages are marvelous. Today I was at a business meeting, and at that business meeting, the topic of conversation centered around a renovation company rep. And what he was saying is that when the government introduced the home tax credit for home renovations, that was for material and labor costs and work incurred between January 27, 2009 up to February 1st, 2010. They had a surge of activity. They were busier than all get out. Then it really slowed down. So there was a bit of an artificial push because of the tax credit for business. Then it slowed down. Now there's been a slight uptick in the last little while, but nothing compared to what they were doing a year ago. So, does this mean the world sucks for the renovator? Not necessarily, because just as the government takes away, the government gives back. And how do they give back? It's because of the March 18th rule change as far as default insured mortgages. Those are the ones where either the lender insists on having a default insurance, or alternatively, you want to borrow more than 80% of the value of your home if you own your home now. Now, when you take a look at your home and you say, I would like to do this, I would like to do that, I would like to do that, what you do is you take your mortgage balance and you add the costs of material and labor for doing all of those little things, and if it exceeds 85%, change your plan. Now, half a plan is not necessarily a perfect home. So what is the alternative for the homeowner, and what is the opportunity for the renovator? With this rule change, which sounds like it's going to suck for everybody. Well, no, it doesn't have to, because one of the rule changes is not changed, and that is that if you are going to buy a new home, you can still get 95% financing. And when you go out and say, look, at my home now does not meet my needs, I would really prefer to have hardwood, I would have granite countertops, I would have this, I would have that, but the money just isn't there in my pocket. I don't want to put it on my credit card. I'd rather have it on a low-cost basis like a mortgage, but guess what? March 18th comes along, gone. 85% loan to value. I don't make that grade. So, you go out with a realtor and you start looking at houses. And you know what? The people that own houses for sale, maybe they're thinking, this house really sucks and I don't have the money to fix it up. So you're in a quandary. Your house you don't like because it sucks. It doesn't have the nice things that you want as a comfortable home surrounding. When you go out in the marketplace, you find similar people with the same thought. I'm selling this because I don't have the money to fix it up. Here's the opportunity both for you, if you're in that position, and the home renovator. You still have 95% financing available buying a new home. Now, that rule about refinancing, maximum at 85%, guess what? You could have a perfect home by taking a look at an existing house, getting the material, getting the labor costs, and that new house, and fixing up that house to make it a perfect home, is all part of that 95% financing because it's a new purchase to you. Isn't that cool? So, what that means is for home renovators, there is a wonderful opportunity coming up for additional business for those people who are stuck in their existing home, think there are no solutions, but you do have a solution, home renovator, because with a collaborative effort between the homeowner taking a look at a different property to put all the things in that different property that they want, the homeowner is happy. The renovator is happy. there'll be a realtor that's going to be happy too. So this is a wonderful opportunity. Home renovators, take heart. There's more business coming. Homeowners, don't be saddened by the rule changes because there is a workaround. And oh, by the way, the realtors are going to be happy too. So what the government takes away inadvertently gives back. Watch your money.